In this video, I'll be providing my regular monthly update to my business cycle risk score, this time for May 2020. Not really a massive change month over month from what we saw in April. We do have GDP numbers now for Q1, which of course are dire, and the rest of the data continues to weaken, as you'll see in this video, despite the fact that the stock market now seems to be trading sideways, but not really giving up much in terms of the gains that it bounced up from back in March. So interesting times. I'll give you my thoughts on what's going on and how I'm dealing with what I'm seeing in the data. Of course, I'm never great at predicting anything, but I can read data and at least make some assumptions and some decisions based on that. So I will do my best to translate that for you. If you are new to my channel, my name is Jared Ayers. I'm a CFA charter holder and I've been managing my own money for over 20 years. And I've created this channel to share with anyone who's interested the thought processes, techniques, and strategies I use when managing my own money and navigating the markets at large. So I hope you enjoy. So before we jump into the data, as usual, I want to let you know that I have created a few videos where I lay out exactly how I've come up with the analysis you'll see through this video. Of course, in this particular video, I'm just going to be touching the tops of the waves. We'll be going to a little bit of detail for some of the indicators that are getting really, really ugly. I just want to highlight a few of those and give you my thoughts on those. But I will be providing a link to those other videos that I've created so that you can create your own type, similar analysis for economic data should you choose to manage your own, hypotheses and track the data yourselves. So without further ado, let's get into the analysis. So as usual, here is the business cycle risk score calculation for May. Like I mentioned, really ugly still, not a surprise. The only real change month over month is now, of course, we have the GDP numbers for the first quarter. Pretty ugly, not giving much in terms of a score. And then, of course, the leading economic index is still lagging a little bit. The data there is still showing from February, which is really the majority of the score so far. But everything else just really, really ugly. So, I mean, you don't want to spend too much time on that. But just wanted to share that really it's not getting any better at all, despite talk about things easing up and the markets kind of reopening, and so we continue down this path. Here's a little flashback to April again. Then we still had sort of GDP numbers that were still not great, but weren't current. So that's really what's driven that change. So I did, like I said, want to jump into a few of the indicators where really are showing some tough signs month over month. They're getting a lot worse. The first one here is the business confidence or PMI index. So purchasing managers index was below 50 last month, but now it's kind of around the 42 mark. Still a little ways, you can see, from where it got to in 08, but still pretty bad, and it's a pretty deep looking trajectory that's heading south. The non-manufacturing PMI, this one was actually above 50 last month, but again it's taken a turn down. Again, kind of at the same level as the purchasing managers index for manufacturing that we just saw, both about the same level. This one didn't quite get as low as the PMI for manufacturing in 08, but the current numbers, confidence basically is heading down very, very quickly. So it'll be interesting to see where that actually bottoms out. Here we go. Okay, so now into some indicators where I've actually had to change the scale on the chart in order to fit the data. So continuing jobless claims. This one last month was around the 12 million mark. You can see in 08 we got to about 7 million or so, maybe as high as 8 there if I'm reading that correctly. But right now, I mean, it's just on a trajectory straight up. I mean, of course, we've had all the job cuts, layoffs, etc. But to think that that's going to reverse course as fast as it got to where it is I think a little bit optimistic. So we'll have to see where that plays out here as we kind of move forward. But that is a big number at I think just about 23 million now. Then of course that brings us to the unemployment rate, which again is hitting record numbers. Again in 08 we hit kind of close to the 10% mark. We're at 14.7 and still on a trajectory heading north, so or south, depending on how you look at it. Not a great sign, not something that I think is going to reverse course as quickly as it got to where it is currently. But again, we're going to have to wait and see. But just staggering results, despite of course a market that seems to be, and that's this light blue line here, it seems to be just kind of a little dip and then off to the races again. So we'll have to see what happens there. Consumer confidence, of course, heading the other way. Got close to 70 last month, a little blip up here in May, but I'm not counting on that either. That could be just from maybe some of the government support that's coming out now. You can see back in 08 there was little blips up and then it would continue down. So it will be interesting to see where that bottoms out. Clearly a big driver for GDP is consumer confidence. So yeah, again, really interesting things to watch these days. And then of course retail sales. So this is the year-over-year change. So it's going to be bad for sure. But this is another graph I had to actually change the scale for. Now down below negative 20% year over year. Not sure where that's going to bottom out. Everything is still probably locked down too much for this to change course very quickly. And then I guess we'll have to see what's actually still open and then what the numbers look like when this thing finally turns around. But again, not very supportive of a market that continues to march pretty much higher day after day, week after week. So it'd be interesting to see where that all flushes out. So just to recap, of course, we have a 0.6 risk score calculation on a 10-point scale. Again, I'll share with you in the link in the description of this video how I come up with all of these calculations and scores, but basically each of my 13 indicators gets a predictive power weighting. I mark down the date of the data, that gives me a time weighting, and then a total weight based on those two items, and then I make an assessment on what I'm looking at in the data as to whether it's decreasing or increasing, and then what the rate of change of the actual direction is. So just a quick little summary for those who are new to this. That then brings us to asset class allocation. So based on the score, this kind of drives out how I might consider allocating the assets in my portfolio across asset classes. Of course, we're down in this little area here. This is of course a table that I used to use I suppose under quote-unquote normal circumstances. This is definitely a new normal, so I have had to make a bit of an adjustment to it, only because I don't believe necessarily that bonds is a great place to be in. Although I will say, with the bond buying that the Fed has been doing, and the most recent announcement that they are now buying directly bond ETFs, so basically participating in the secondary market for bonds. Again, a little bit unprecedented, never seen that in the US before. That's something that the Bank of Japan has done since, I guess, the Nikkei tanked in about 1989 or so. But so it's interesting. I mean, with them buying directly into the market, that is going to support prices for bonds. So and if they are or wanting to be the market, they definitely have, with the ability to print money, basically bottomless bank account. So if you have the stomach to withstand, the volatility, you may want to participate in some of those bond ETFs that the Fed might be buying. But again, that's each to their own. I'm going to stay out of it myself for now. So this is really probably what I'm more focused on, kind of right out of bonds and equities, just because of that disconnect I'm seeing between the data and the actual market. Heavy to cash, heavy to gold, and just kind of in a wait and see pattern, quite frankly, until we see how see the market start to, I guess, react or behave in a way that the data kind of coincides with. So in terms of the history, again, April and May, not that much different. We know the story there. Kind of what we've seen in the past. Again, staying out of the equities and bond markets. I do want to see a very significant correction there before I would wade in, and or the data to start showing any kind of positive sign, which, as you can see from this video, is a little bit ways off, I believe. So here we are, steady state, I suppose, until we see what happens. I'm kind of at a loss for words right now. It's pretty amazing what we're seeing. Unprecedented times, unprecedented measures, and so I hope that was useful. Again, I'm not anticipating much different for next month, but we'll update it again and see what it looks like. So I hope you got something out of that video. Again, not much change month over month, but I think just amazing that the data continues to deteriorate, yet the market continues to trade at least sideways, if not up, but certainly refuses to coincide with what the data is telling us. Of course, with the Fed backing the markets basically, and now actually entering directly into the markets with direct bond ETF buying. I don't know how long this will go for. I don't know where things end. I know I'm going to want to own some real assets, hence my allocation to gold. And of course, each investor will have to make their own decisions based on what they think is best for them. So if you did like this video, please do hit the like button. Give me a thumbs up. It does help the YouTube algorithms. If you're not yet a subscriber but you want to see similar content going forward, please don't hesitate to hit the subscribe button. And if you want to leave any comments, any questions, any suggestions as to topics I might want to cover in the future, then please by all means hit me up in the comment section as well. Until next time, thank you very much for watching.